Hello, welcome back to Commerce Easy Notes. Today we are going to discuss on investment accounting. Investment accounting. When a business is concerned, it may buy shares, debentures, stocks from other businesses or securities of government with a very pure view to earn income. That income may be in form of interest or dividend over a period to make profit by sale. This fund, when invested in government securities or shares or debentures or bonds or stocks of a companies with specific objective of earning income or profit, is known as investment. So these funds, when invested, represent investment. So we need to prepare investment accounts for recording the investment of shares, debentures and government securities. We know in accounting we should always keep records and proof as documentary evidences. For this, we prepare investment accounts. When a business can buy or sell securities like any other commodity in the stock market through brokers, agents or banks. So this is conducted properly and recorded with investment accounts. There are so many terms related to purchase and sale of investments like face value, at par price, at discount, at premium or market value. These all are the basic concepts of accounting we have been discussed in the previous videos. Here we'll be seeing what is mainly concerned with investment accounting. The investment accounting is mainly dealing with the investment accounts of shares, debentures. It is recording of those fixed interest or dividend. And these dividend or interest may be of four categories. Cum dividend, that is including the dividend shares, ex dividend, that is excluding dividend shares, and cum interest, that is including the interest, and ex interest excluding the interest. This is how it is categorized, these investments, and these include typical journal entries and treatment. That will be studied in detail in this video. When an investment is purchased or sold on the date of interest and the quotation price contains no interest, in such situation the journal entries are normal. That is, when you buy a investment, the journal entry will be investment account debited to bank account with the quoted price plus the brokerage. Brokerage is the commission paid to the agent. And when the interest or dividend received after the purchase, that is for receiving interest or dividend, we write the journal entry bank account debited to interest or dividend. When the purchase or sale of investment is before the date of payment, that is, we say a date for this payment, due date for this interest payment. When it is done before, purchase or sale is done before the investment date or payment of interest, the recording journal entry will be when the investment is purchased and cum interest, whether it is including interest, it will be investment account debited, interest account debited to bank account. That is, bank account is with quotation price, investment is with actual cost price, and interest with the accrued interest. And when the interest is received on due date after the purchase, as normal, bank account debited to interest account, and the balance of this interest account will be transferred to profit and loss account. Now when the interest situation is X, that is excluding, and then the seller retains the right to receive the interest or dividend. Here the buyer has not to pay accrued interest due to from the last interest date to the date of transaction. Therefore, the seller, together with the cost price of the investment, is ready to pay. Here, when securities are purchased at X interest, investment account is debited, quotation price, interest account to debited to bank account. Here, interest is with accrued and investment is with the quotation price. And bank account contain both quotation price plus accrued. Here it is excluding interest, therefore it should be separately added out. The interest is received on due date after the purchase. Bank account debited to interest. It is the whole of interest for that. We'll understand investment accounting with an example. On July 1st, 2019, Cochin Investment Limited held rupees 1 lakh 6% debentures of Charter Jural Limited, which appeared in books at rupees 96,500. That is the cost. 1 lakh is the face value amount. The interest is payable on July 31st and January 31st. On October 1, 2019, a further rupees 50,000 debentures in Charter Jural Limited were bought at rupees 98 cum interest, and on January 1, 2020, further rupees 30,000 debentures were bought at rupees 97 ex interest. On March 31st, 2020, rupees 80,000 debentures were sold at rupees 101 cum interest, and on June 1st, rupees 60,000 debentures were sold at rupees 102 ex interest. Show the investment account for the period ending June 30th, 2000. The working note says the interest accrued as on July 1st, 2019. That is, the opening is given on July 1st. That is with two balance BD rupees 1 lakh and the cost amounts to 96,500. Therefore, the interest on that period will be calculated. That is 1 lakh into 6 by 100, and that time period should be considered. The last due of interest will 1 is 5 months. Therefore, 5 by 12 gives 2,500. And the cost of investment 2,500, that will be debit to along with the opening balances. Now, after that, the question says interest is payable on July 31st and January 31st. On October 1, 2019, before that October 1 transaction recording, we need to consider the interest payable at July 31st. Therefore, the interest payable on July 31st will be similar to the previous one, 1 lakh into 6 by 100 into 6 by 12, but amounts to 3,000. That will be credited. And after that, it is said on October 1. After July comes October. 50,000 debentures and come interest 98 rupees. Therefore, to bank account with 98, 50,000 is the price. Therefore, 50,000 is the face value. Therefore, 500 will be the number of shares, debentures. That is 50,000 divided by 100. We'll assume the face value is 100 as 98 is the come interest. Therefore, 500. That it is purchased in October. Therefore, from the due date, what is the time period? Last due will be on July 31st. July to October 1, it is 2 months. Therefore, 50,000 into 6 by 100 into 2 by 12 gives out 500. That is the interest. It doesn't come in, it is included. So we need to subtract it out. So total amount payable is given at rupees 98. 98 into 500, that is the number of debentures. It amounts to 49,000. We're subtracting the interest, it gives 500. 48,500 is the amount of cost price. So when you're recording it to bank account at 98 come interest, 50,000 in nominal value, 500 is interest, and cost it amounts to 48,500. So you have to always follow the date pattern. So this after this October happening, it is set in the question in January 1. So we'll see we have to consider the interest payment also throughout. So it is conducting of January 1. Therefore, January 1, 30,000 is the debentures bought at rupees 97. Therefore, 30,000 January 1, what will be the interest will be calculated. 30,000 into 6 by 100 into 5 by 12 amounts to 750. Therefore, on 2020 January 1 to bank account rupees 97 ex interest, 30,000 in nominal value and 750 in interest. The cost will be, tax interest is 97. Therefore, 300 is the debenture. 300 into 97 gives out 2900. It is excluding. Therefore, need to not consider any interest. 2900 will be a cost price. And simultaneously, we need to record the 31st interest payment. Interest payment of January 31st will be recorded. This is how the investment accounts looks. Debit and credit side with dates column, particulars, and 3 amount column: nominal value, interest, and cost. 1 lakh and cost 96,500. July 1 is the to balance interest 2,500. Similar to the working notice carried down. Now after that, on 31st March 2020, 80,000 debenture were sold. One come interest. Therefore, at that time, March 31st, what will be the interest will be calculated. That is interest on 31st March 2020 on sales is 80,000 into 6 by 100 into 2 by 12. It amounts to 800. The amount realized from the sale is 80,000. Therefore, the face value will be 100. Therefore, 800 into 101 income interest. Therefore, 80,800 lessing the interest calculated 800 gives 80,000. We have to note that income interest will always have to subtract the interest. It is including the interest should be, therefore need to subtract the interest out. Then we will have to record it by bank account. 80,000 in nominal value, interest in 800, and the cost remaining 80,000. And then interest on June. On June 1 again we are selling out debentures at 102x interest for 60,000 debenture. Therefore 60,000 into 6 by 100 into 4 by 12. That is from January. What is the due date? January 31st is the last due date. From January 31st to June 1st, 4 months. Therefore 1,200. Interest accrued on June 30th will be the total investment that is available. Therefore, the interest on June 31st, along with the to bank account, 60,000 is the nominal value. As such, we'll write, and then interest 1,200, and the amount becomes 600 into 102. It is 61,200. That is how the cost comes. It is not totaling of interest. It is the cost 600 into 102. And then we are closing the interest by interest accrued for total about this investment. That is, the investment held was 1 lakh in the opening and 50,000 from the purchase and 30,000 in the purchase of March. Then it becomes 1,80,000, and selling out 80,000 plus 60,000, 1,40,000. It gives out 40,000 is the total sale investments. Is a total of investment. The interest accrued becomes 40,000 into 6 by 100 into 5 by 12. That is rupees 100. The interest accrued will be rupees 100. And the balance on June 30th will be the balancing figure. We are balancing 40,000 is the total amount and 1,80,000 is the total nominal value into the cost, the total of all the costs. It amounts to 1,74,000 gives you 13,869. From that it will be closed and you get the profit and loss account. The balance will be transferred to profit on sale account. Looks like with all the adjustments and the working notes, and we'll see the 2019 year, this date column. And the balancing figure is given out to balance CD 40,000 and 38,689, and it will be carried forward 40,000, and interest column 1,000 will be carried forward with 38,689. At the beginning it's some confusing, but you need to repeatedly see the video and conduct